Hello friends.
Hello, sir.
Today we are going to discuss something about fixed assets. Okay. Now, do you know what is a fixed asset?
Fixed asset is something which can be used for annual 1 year. Maybe
Which can be used for more than 1 year, right?
1 year.
What is an example of a fixed
Land
asset?
building.
Land building is an example of a fixed asset. Alright. So, when we talk about fixed assets, we know that it is something which is examples of fixed asset would be land, building, etc. And it can be used for more than 1 year. Okay. When we talk about IFRS in particular, fixed asset is known by a different name, and it is known as property, plant and equipment. Okay. So, and practically speaking, there is no difference about it. It's just a different name. So when you talk about land, land is a property, right? When you talk about building, it's again a property. When we talk about fixed asset, we talk about plant and machinery. So plant and machinery. When you talk about machinery, it can be called as an equipment. So practically, there is no difference between what is a fixed asset and what is property, plant and equipment. It's just that under IFRS, fixed asset is known as property, plant and equipment. We will be dealing with a specific standard called IAS 16, which deals with property, plant and equipment. Okay. And just as an introduction, please understand that there is no major difference between how we deal with fixed asset in India versus how it is dealt with in IFRS. However, there are some important differences which we will cover for sure. Okay. So when we talk about fixed assets, there are two types of fixed assets that we usually talk about, right? What are those?
Tangible and intangible.
Tangible and intangible assets, right? So when we talk about tangible assets, we talk about the examples that we've just seen. For example, land, building, property, plant and machinery. Those are all tangible assets. But then there are some intangible assets as well. Example, goodwill, patent, etc. Please note that today whatever we are discussing is only about tangible assets. Okay? So IAS 16, which talks about property, plant and equipment, categorically talks about tangible asset. Okay? Other than investment property, and we will deal with that in a later session. So what is property, plant and equipment? If we come at the definition of PP&E, which is PP&E, property, plant and equipment is any tangible item which is held for use in relation to production of goods or services, okay, or given for rental to somebody, if you've given it to rental, or for any administrative purposes, okay. And it should be held for more than one period. Okay. Now let's look at this definition. It is talking about that fixed asset or a property, plant and equipment is only a tangible item. So we are not talking about any intangible item. It must be held for use by the organization for production of goods or services, or for rental, or for administrative purposes. Now, for production meaning, if there is any plant and machinery, the plant and machinery can be used for production, right? If it is used for rental, so if I have a building and if I rent it to somebody else, it is still my asset which I have given it on rent. If I am talking about a factory shed or an office building, right, I am using that building for administrative purposes, right? All these conditions have to be satisfied. So either of these conditions have to be satisfied, and it should be used for more than one period. Now when we talk about period, essentially we are talking about 1 year, one financial year. Okay? So the definition of property, plant and equipment is clear to everyone? Is there any question? Shall we move ahead?
Yes.
Shall I rub the board?
Yes.
Now let's come to the initial measurement or recognition of the property, plant and equipment. Okay. how do you identify whether an item is property, plant and equipment or not? So we've seen the definition of a tangible asset or a property, plant and equipment. In order for a property, plant and equipment to be recognized as an asset in the books of the entity, two conditions must be satisfied. Okay? One is that the future economic benefits that means that it is probable that the future economic benefit associated with that asset will flow to the entity, meaning that the company must be able to understand that if I buy this asset or if I have this asset in my possession, I will have some economic benefits in the future. And we've seen earlier what future economic benefits may mean, that it should be able to help me produce some goods which I can sell and get back some revenue, right? And the cost of the asset must be measured reliably. Okay? I must be able to identify what is the cost of this asset to me. Now, both these conditions have to be satisfied in order to be recognized a tangible asset as a property, plant and equipment. Just for better understanding, when do you identify that future economic benefits will flow? This can happen only when the risk and reward with respect to that asset must be acquired by the entity. For example, if I have this asset with me, I know that this asset will produce some goods for me. For example, at the same time, I will be responsible if this asset has requires any repairs. So if the asset requires any repairs, I will have to do those repairs. So both the risk and rewards must have been transferred. Okay, that is number one. And number two, the entity must be able to control that asset. It is my asset now. It should be in my control. Okay. So these are the two conditions which are required to be satisfied before an asset can be recognized in the books as an asset. Okay. Now please understand that there can be some situation where an asset does not gives you future economic benefits directly. Okay. We've seen that, for example, let's say if there is an office building, everyone is working in that office. But is it giving me revenue directly? No. Right? You can say that people can work under the tree also. But at the same time, it is not providing directly any future economic benefit, but it is creating an environment wherein people can work effectively and accordingly the benefits are increased. This is one example. There can be another situation. Let's say I have a nuclear power plant. Right? They can, a lot of times the companies are required to have some assets for environmental reasons or legal reasons. Okay? Even in those cases, it can be recognized as an asset even if the future economic benefits are not directly attributable. Let's take an example of a real estate. Okay? Anyone stays in an apartment in a complex here?
Yes, sir.
Yes? So, a lot of time what happens is, let's say if I am a builder, I have purchased a huge plot of land in which I will erect some buildings. Now, of the area that I have bought, there is one part of the area which is a pond. Right? The government regulations may require that the builder cannot fill up that pond and erect a building there. Okay? The builder will have to maintain that pond because there is a shortage of water in the country. So in that case, the builder has bought that land which includes a pond. He has paid the price for the pond as well. He is not erecting a building on that pond. So that pond is not giving any direct future economic benefits. But at the same time, the area of the pond which the buyer has bought would still be called as an asset in the books of the buyer. Are we okay? Any questions at all?
No, sir.
Can we do a quick recap? So, we've talked about the definition of a property, plant and equipment. What is the definition of property, plant and equipment? It is an
Tangible thing
tangible asset.
which can be used for production, administration, or for rental purposes.
Beautiful.
And which
Okay.
is held for more than one accounting period.
More than one period, right? And secondly, in terms of recognition of a property, plant and equipment, two conditions must be satisfied. What are those two conditions?
Future economic benefits and cost must be measured reliably.
Perfect. So then it should be probable that the future economic benefits related with that asset will flow to the entity, and the cost of the asset must be measurable reliably. Okay? Shall I wrap the board?
Sure, sir.
Now we talked about cost, right?
Yes.
So an asset has to be recorded at cost. We know that in case of a fixed asset or in case of property, plant and equipment, it is measured at cost. That is the initial recognition. Now what does this cost mean? What are the components of the cost?
Purchase price.
Number one is purchase price. Very good. So I went to the seller, I went to a shop, I have bought a table, right, or I have bought some furniture. So I said this is the total price of the furniture. Okay, so the purchase price. Plus, let's say there are some taxes attributable to it. There are some taxes which are non-refundable. So non-refundable taxes would be forming part of the cost. Let's say there are some refundable taxes or there are some discounts or rebates, right? So rebates, discounts, refundable taxes. Plus, there are some costs which are associated in terms of installation, okay, or directly attributable cost. Example, installation, site preparation, professional fees, okay. These are costs which are required to bring the asset to use, okay. Right from the time I have purchased the asset till the point I need to bring the asset to its use, whatever costs are attributable, those costs are added, okay. Next is any sort of borrowing cost. If I have taken some loan in order to purchase the asset, I know that this loan is only for purchasing this asset only. The cost of my borrowing is directly attributable to this asset, okay. Even the interest cost which is charged will be charged to the asset only, okay. If there are any removal cost, and we'll explain what this means. What do you mean by removal cost? If I am working as a company where I know that in order to dismantle the asset, I will have to incur some costs, and I know this today only. For example, let's say I operate a nuclear power plant. If I am operating a nuclear power plant, it is very resource heavy, right? I use the minerals, I use the resources. Whenever the power plant closes down, the companies are required to bring back or restore the natural resources of that area back, right? And there is a lot of cost which is involved in order to restore that asset back. So any removal cost. Now these costs will be estimated. I don't know the cost now, right? But then all these costs are estimated. Estimated removal costs are also added. What are not added? We will not add any administrative overheads. So your salary, that is a manager's salary, will not be added to the cost of the asset, right? Staff training cost will not be added to the cost of the asset. But professional fees, site preparation, etc. will be added to the cost of the asset. Okay? Any questions on this?
So I have heard about a thing called AMC, annual maintenance contract. So for this, which cost will it incur out here?
Annual maintenance cost is a regular cost. It is a recurring cost which will be incurred during the use of the asset. So that is not a cost which is capitalized. Right? When we talk about measured at cost, this is the cost at which the asset will be recorded initially. Right? My book value of the asset. Annual maintenance contract is the repairing charges or maintenance charges which are recurring in nature. So they are not capitalized. they are taken to the profit and loss account. This cost is taken to the balance sheet. Okay, so that is not a cost to the asset. Are we okay? Any other question? Alright, so we said that this is the measurement of cost at the time of recognition, initial recognition. Okay, what if I have purchased the asset already and year 3 I am spending some time? So we had a question around annual maintenance contract. An annual maintenance contract is something which occurs on a year-on-year basis. I have to spend on it every year. But what if there is a major part replacement? There is a replacement of a major part. So let's say if I have bought a car and after year 3 I have to replace the engine of the car. Engine is a major part of the car, right? What if I have to do a major overhaul of the asset, right? A complete overhauling of the asset. Those are subsequent costs and all the major costs which are spent on the asset subsequent to the initial recognition may also be capitalized. So we will add this to the cost of the asset. Okay? Any question? No? Are we good with this? So please remember that here there is a huge amount of judgment that is required, because if it is a recurring cost, right? Regular cleaning, maintenance, etc. of the asset, that is not added to the cost of the asset. But if there is a major cost which is incurred on, for example, a change of major part. So if there is a change of the car bulb, headlight bulb, I will not add it to the cost. Why? Because the bulb I may have to replace the bulb every year, every 6 months. So that is not added to the cost of the other, that part of the repair. But then if it is a major component, a steering, let's say, or an engine, or even a car battery to a certain extent, because a car battery, the usual life of a car battery is more than 1 year, right? An engine can go up to 7 years, 10 years at times. So if I have to change that, it's a major cost, and accordingly it will be added to the cost of the asset. Okay? Any questions? Can I run the board? There are 2 more things which we need to keep in mind when we are talking about initial cost. Okay? One is, we are talking about a cash price equivalent. We are talking about the cash price equivalent. So let's say if I have purchased the asset, okay, if I bought the car today, the car's value is, let's say, 5 lakh rupees. But at the same time, I am not paying that 5 lakh rupees today. I am saying I will pay 6 lakh rupees, but I will pay it next year. That is, the payment is deferred. In that case, what is the cost of the asset? The cost of the asset is 5 lakh rupees, which is the fair value principle under IFRS. We are aware of that. So in this case, if the cash price is 5 lakh rupees and if the deferred payment is 6 lakh rupees, so DP I am talking about deferred payment, CP I am talking about cash price. In that case, the cost of the asset will be the discounted value of the amount paid. That is, we will discount this amount. And the fair value of the payment, fair value of the asset after discounting is recorded as the cost of the asset. Okay? And the interest portion will be charged as an interest amount. Okay? That is number 1. Number 2 is, in case of exchange, in case there is an exchange of asset, in that case, let's say I have given you something in return for a car, and if there is no cash component at all, then in that case the cost of the asset will be the fair value of the asset acquired if measurable. If you can't measure that, it will be the cost of the asset or the fair value of the asset given. Okay? Now this is not a very common transaction, but then it's still important to know under IFRS. Okay? Are we good? Any questions? Can you do a quick recap of what we've learned so far? Right? So, what is property, plant and equipment? It is a tangible asset which should be held for use for production of goods or supply of services, or it can be used for administrative purposes or for rentals. Okay? When do you recognize property, plant and equipment? You recognize if there are two conditions which should be fulfilled. One is future economic benefits, and the second is cost should be measured reliably. Okay? We have talked about what is cost. So cost would be the invoice price or the purchase price. Do you add installation cost to it? Yes. Do you add administrative cost to it? No. Do you add site preparation cost to it? Yes. Do you add estimated removal costs to it? Yes. Would you add taxes to it? Yes, only if it is non-refundable. If it is a refundable tax, we will not add it. Okay? And then we've talked about two specific cases. We've talked about cash price equivalence, that is, remember that we have to record the cost at its fair value. Okay? So if the payment is deferred, the discounted value of the total payment will be recorded as the cost of the asset. And in case of an exchange of asset, it is the fair value of the asset acquired. Alright? We've talked about one more thing, which is subsequent cost. What if, so if I bought a car and if I have to change the bulb of the car, is that capitalized? No. But then if I bought furniture, if I have to change 5 chairs out of my total set of furniture, will that be capitalized? Yes. It will be added to the cost of furniture. Why? Because it is a major cost. Okay? Thank you.